Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Let's get ready for next week and next month with a visit to the calendar. Everything really kicks off on Wednesday, November 1st, 8:15 a.m. Eastern Time. We'll get a look at ADP employment. At 10, job openings. At 2, Fed Reserve decision on interest rates. 2:30, Fed Chair Powell press conference. Then on Thursday, November 2nd, initial jobless claims. Friday, November 3rd, 8:30 a.m. Eastern, U.S. unemployment rate, U.S. non-farm payrolls, U.S. hourly wages year over year. Normally, that doesn't matter. Everything matters now. And at 9:45, if that wasn't enough, we're going to get a look at U.S. services PMI. Okay, moving over to AMC, Wednesday, November 8th, the 2023 AMC annual meeting of stockholders, 2 p.m. Eastern Time. Wednesday, November 22nd, Sony Pictures will release Napoleon, and Disney's Wish drops. I'm going to give you more on that. Friday, December 1st, Renaissance, a film by Beyonce. So, are you personally nervous, Uncle Frank? Hell no, I'm not nervous. Chaos is my friend. I'm not short billions of synthetic shares. I'm not leveraged to my eyeballs like 40 to 1. I'm not so desperate. I'm paying idiots to write hit pieces every day on a theater stock. That's not me, that's them. I don't have market makers spending millions spoofing and layering a stock every day just to keep it under control. I'm currently long only AMC and XRP. Uncle Frank is cooler than a fan. Speaking only for myself, every time I buy or average down, I'm buying the stock at under $1 on a pre-split basis. They have become so predictable in their manipulation of AMC, I will continue to scalp them and wait for a black or white swan to ruin their holidays. And what if we show up to the shareholders meeting with preliminary results from AMC Project Popcorn? What if the apes actually own this float 3-4 times over? What if the analysts on the call hear about that? I'm not nervous, I'm prepared. They should be nervous. Should they be nervous about this headline from Forbes? Beyonce's concert film has made millions in advance sales after just one day. And how about this headline from Deadline? Five Nights at Freddy's, 78 million, busting all sorts of opening records. Best for Halloween, Peacock Day, and date, etc. And from Box Office Pro, long-range box office forecast, Disney's Wish and Ridley Scott's Napoleon. Both of these movies drop the same day, November 22nd. Wish, they're expecting their 3-day opening weekend, 45 to 65 million. Domestic total tracking range, 185 million to 289 million. Napoleon, 3-day opening weekend, 16 to 21. I think they're way low there. Domestic total tracking range, 46 to 74. Now back to Wish. Early pre-sales for Wish are well above the pace of 2021's Encanto and 2022's Strange World, the former having released as COVID-19 concerns remain front of mind for parents, and the latter turning into a major misfire that didn't appeal to much of Disney's core audience. Hopefully, this is going to be a huge day for AMC. Guys, as I said, I'm not worried. They should be worried. How about this headline from Yahoo Finance? Bad loans are becoming a real problem for regional banks. And look who's up there. Goldman Sachs and Bank of America, both short AMC. From the article, office buildings in Southern California, a healthcare operator in the Northeast, a bankrupt oil and gas company in the Atlanta suburbs. These were among the assets that became the source of lending problems for regional banks in the third quarter as corporate borrowers and commercial real estate begin to show more signs of strain. In recent weeks, many mid-sized financial institutions across the country reported that non-performing loans, a measure that tracks borrowers that are behind on their payments, rose during the third quarter. They also disclosed mounting costs from unpaid debts written off as losses. Buckle up, guys. Uncle Frank has been telling you for months the commercial real estate thing is going to be formidable. Now remember, guys, Uncle Frank is looking for a black or white swan event to adversely affect the leverage chain within the portfolios of the predatory short hedge funds. How they doing? From Bloomberg, U.S. weighs leaning on banks to curb hedge fund leverage trading. From Reuters, hedge funds up leverage but fear directional bets with blurred macro picture. From Yahoo Finance, global watchdog warns over very high leverage in hedge funds. Financial Times, FSB warns of risks posed by hedge funds' hidden leverage. You want to hear another thing hedgies should be concerned about? This table from The Numbers depicts market share for film distributors in 2023, and there's a new player on the list, coming in at 12th, with only its first release, AMC Theaters, because now we are not just an exhibitor of films, we are a distributor. I wonder where we'll be on this list when we drop Beyonce. Stay tuned, hedgies. And a shout out to my gold bugs, Black Arrow and Dom Pantaleo. Hedge Week, gold market sees second biggest ever short covering rally on record. Short positions in the gold market are falling as money managers are increasing their speculative gross long positions in COMEX gold futures, leading to the second biggest ever short covering rally on record, according to a report by Kitco, citing data from the Commodity Futures Trading Commission. And how about an update on XRP? Ripple XRP is the most traded cryptocurrency on this exchange. XRP KRW has been the most popular trading pair on South Korea's largest crypto exchange. XRP KRW is the top trading pair on Upbit, outperforming Bitcoin and Ethereum. XRP has been the top ranked trading asset on Upbit for 70 days, surpassing Bitcoin's 64 days. XRP recently reached 58 cents. Predictions suggest a potential surge to $6 by 2024 after crossing the $1.30 mark. And the swans continue to gather. From the Wall Street Journal, the mortgage market is so bad, lenders want ex-employees to give back their bonuses. Speaking of bonuses, have you seen this meme? I made it. In 2020, AMC lost $4.6 billion, but Adam's comp plan doubled to $20.9 million. Our stock price is down over 83% year over year. Maybe it's time to reverse split Adam's stock bonus. And from Reuters, U.S. mortgage rates soar to highest in more than 23 years. Look at that chart. Pending home sales that fell out of contract. That's people just canceling at the last second, spiking up to 16.3% from the article. The interest rate on the most popular U.S. home loan last week jumped to the highest since September of 2000. That's the 30-year fixed, marking its seventh straight weekly increase and driving mortgage applications to a 28-year low, a survey showed on Wednesday. That's getting serious. Okay, guys, you have to have the courage to keep an eye on potential events that can affect your investments. While a huge spike in COVID could roil the markets and our enemies, They could also impact our theaters. The reason Uncle Frank roots for white swans more than black swans is our enemies, the predatory short hedge funds, are good at two things, shorting and hedging. So be careful for what you wish for out there. Here's two headlines. COVID map shows states where positive cases are rising, and new COVID variant wreaks havoc. These are the 9 states with the highest number of cases. From the first article from Newsweek, cases of COVID-19 are high in 14 of the 50 U.S. states, according to new data from the Centers for Disease Control and Prevention. Cases are highest predominantly in the West, North Central, and Western U.S., with experts saying that cases are likely to rise further over the winter months. Newsweek has contacted the CDC for comment by email. Don't worry, Uncle Frank keeps an eye on all this crap, and I will sound the alarm if I see something I think you need to know. Now, guys, the writer's strike is behind us, but the actor's strike has been going on for over 100 days. Hollywood is shut down. A lot of people don't know that. Hollywood strike negotiators under mounting pressure to make a deal. Friday's meeting, which 2 sources told NBC News had been, quote, challenging, did not result in a deal. I'm hoping we get a deal this week and maybe even a pop in the stock. The months-long actors' strike has wreaked havoc on Hollywood. Thousands are out of work. Productions have been put on hold and numerous industries have been affected, costing the California economy over $5 billion. Hollywood's studios and streamers returned to the bargaining table with SAG-AFTRA, the union that represents over 150,000 actors. That was on Friday for what is the 3rd round of meetings this week. So guys, hopefully we get a resolution to this soon. Back to Swan Watch for a moment. Remember, the U.S. is printing money while $33 trillion in debt, so we can pay to have our Navy in the Middle East. We hand money to Israel for their defense and the Iron Dome. We hand money to the #1 state sponsor of terror, Iran, so they can support Hamas. We're handing over billions to Ukraine so they won't expose the corruption and secrets of our politicians. So let's get an update on the mess in the Mediterranean we're paying for from Zero Hedge. Israeli tanks exchange fire with Hamas inside Gaza. Small arms clashes heard as offensive expands. The U.S. says it's concerned ground invasion could derail hostage negotiations. So what should you know for the upcoming week? Let's close out this episode with a visit to the morning brief. After a busy week for big tech earnings, the market's attention will be focused on 2 key events in the week ahead: the Fed Reserve's latest policy decision and earnings from Apple. With the S&P 500 last week falling into correction territory, investors will look to the U.S. Central Bank and the biggest company in the index to steady things during what's been a challenging few months for investors. A more than 2% decline across all 3 major indexes last week brought losses since August 1st to 10% for the S&P 500, 11.5% for the NASDAQ, and 9% for the Dow Jones Industrial Average. Quarterly reports from Google and Meta received a chilly reception last week, while results from Microsoft and Amazon were more positive, but not enough to lift investors' spirits broadly. In addition to Apple's quarterly report, results from McDonald's, AMD, Caterpillar, Qualcomm, Eli Lilly, Pfizer, Airbnb, and DoorDash will highlight a jam-packed week for corporate results. Away from the Fed Reserve's latest policy announcement, the economic calendar in the week ahead will bring investors a crucial October jobs report, key readings on manufacturing activity, and an update on job openings. Strong GDP data and the Fed's preferred inflation measure last week bolstered the case for the Fed to keep rates elevated for an extended period, and perhaps kept September's forecast for one more rate hike before this cycle is over in play. So what's going to happen on Wednesday? Here's some opinions. We expect growth to slow in Q4, but not significantly below trend, wrote Bank of America economists led by Michael Gapin in a note on Friday. Powell's speech on October 19th suggested that the Fed could hike further in response to strong activity data. That is, it might not wait for inflation to increase again because it's aiming to preempt inflation. Given this, we think there is enough momentum in the economy to warrant one more hike. Market expectations as of Friday afternoon, however, were still pricing in a 97% chance the central bank holds rates in a range of 5.25 to 5.50 at the conclusion of its two-day meeting on Wednesday. Michael Pierce, lead U.S. economist at Oxford Economics, argued in a note last week that this economic data is only part of what is likely to drive the Fed to sit tight this week, and only part of what might keep rates elevated for the foreseeable future. Quote, "The surge in bond yields means the Fed is likely to remain on hold next week and probably in December too." I would agree with that. In closing, guys, our annual shareholder meeting is now just 10 days away. I'm making my call right now. I believe our stock price will be higher than it is today by the meeting. Give me your call in the comment section below. This is not financial advice, and I am not a financial advisor. I will never tell you to buy, sell, or hold any security, options, or cryptocurrency. But tell me what you think is going to happen by then and why. I think AMC is wildly oversold and undervalued at these prices, which are down over 84% year over year. I think Adam Aron, his management team, and the board better do something by the meeting, or they're going to have to face some tough questions from investors. While I think Adam's team deserve their base salaries and non-stock cash bonuses, I think they should cut 2023 stock bonuses by whatever our stock is down year over year. That's right, around 85%. If you haven't yet, please take 10 minutes to go to amcprojectpopcorn.com and complete the survey. Let's prove once and for all how many times over we own this bitch. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.